Hello and welcome. I am Mtambo, a registered tax practitioner, and today we are doing a reaction video to the video that was posted by this channel over here called Zimasa Mustafa Vabaza. And the topic of the video is South Africa's small businesses are overtaxed and it's gotten out of hand. So I saw this video on my feed recently and I thought it would be an interesting listen. I have already watched it and I've got some thoughts on some of the points that were mentioned. We're only going to look at the first 2 minutes of the video, so you can go and watch the rest of it. But let's get into
I want us to be honest.
video.
Running a small business in South Africa is tough enough without the government taking what it feels more and more like it's their fair share. When you look at the numbers, it becomes crystal clear that South African small businesses are drowning in taxes, fees, and levies. And a lot of that would make even the most seasoned entrepreneur or small business owner think twice about starting a venture in South Africa. Let me actually paint you a sobering picture. Let's say you've built a successful import and distribution business right here in South Africa, and you've got 11.5 million rand in revenue. Here's exactly how the government systematically will strip away your earnings. First, they take 1.5 million rand in VAT, that's value added tax. That's 15% of your invoiced revenue. Then 800.
Okay, so I think that's the first place that I wanted us to start at. And what we'll do is we will jump into Excel. So I have got here the numbers that he has quoted: 11.5 million rand in revenue and 1.5 million rand in VAT that the government taxes you as a business owner and takes away. Okay, so the first thing that I wanted us to look at was the fact that this 1.5 million rand here is partially correct. It's partially correct, correctly calculated, and the way you calculate it is by applying this VAT fraction over here, and you get to 1.5 million rand. Okay, so the reason that I say that this is partially correct is because, as we saw, the calculation is fine, but this VAT here that we calculated is a component of the VAT equation, and the VAT equation is output VAT, okay, less what's called input VAT. So if I unhide this here, so I've got input VAT over here, right? Now, this figure here was not mentioned in the video, and we got to this figure by taking the 4 million rand cost of sales that he will mention in the video and applying the same VAT fraction, 15 over 115, that we applied to get to our output VAT. Okay, now, what is the difference between output VAT and input VAT? Output VAT is the VAT that SARS requires all VAT vendors to charge to their customers whenever they sell products. So outputs are, the goods or the services that the business sells. Say, for example, I make, say cookies or wedding cakes, and I sell them for 100 rand each, right? What would happen is that I, the owner, would have my 100 rand over here, which is 100% of my selling price that I want. And then SARS says, okay, we see that 100 rand that you've been charging your customers. Please can you add 15%, whenever they're buying, add 15% for us. So you are collecting this 15% on behalf of SARS, and what the customer pays is 115 rand or 115%, right? So that's this 115% that we use in our VAT fraction. The implication of this being that what's actually happening here, okay, if we unhide this row now, is that the 11.5 million that's quoted in this video is actually just collection in total. Our revenue is only actually 10 million rand. Did I get that right? So our actual revenue is only 10 million rand because the 1.5 million we collected from SARS. Okay, now let's jump into the input VAT here, right? So I mentioned that we applied our VAT fraction to our cost of sales. Our cost of sales are the ingredients that we use to make our wedding cake. So that'll be our vanilla essence, our butters, our sugars, etc., etc. Whenever we buy from our suppliers, those suppliers would have charged us with an output VAT themselves, okay, as they're required to do by SARS. And then at the end of the year, whenever SARS is saying, can you pay us now the 1.5 million that you've been collecting on our behalf, it also says, but there is an amount that you've spent to buy your ingredients so that you can even make this 10 million rand. So we are allowing you to deduct that amount from the 1.5 million, okay, and then you only pay us this 978,000 rand here. So we can see from this example that you never had this 1.5 million to begin with as a business owner, right? So what's correct to say is that my revenue is 10 million, my collections are 11.5, and I need to pay SARS it's 1.5 million because I was just holding on to that money for them. But SARS also gives me the benefit of saying, well, I paid someone else that when I bought ingredients. Then they say, okay, we'll give you this 521,000 Rand in VAT back. Therefore, your business never pays any amount of tax, right? Okay, let's go back to the video.
180,000 Rand in import duties, 22% of your 4 million Rand cost of sale.
So then we have the matter of import duties, right? Now, I do not know exactly how we got to this figure of 880,000, but I do know that typically you would find that a large portion of this 880,000 Rand is VAT. And because it's VAT on goods that you pay to the government to bring in your stock, you'll actually be able to claim that back because remember, it's input VAT. But also we pay fees, etc., for the use of our ports, right? They have to be maintained, okay? There is a cost to running the ports. And I don't think it's fair to say that the cost of these ports should fall on every single South African. There are people out there who are living in such a way where they don't need or they don't benefit from anything that has been imported into the country. So it's not fair that we should only put the burden of upkeeping these ports on the people that aren't using it, right? So we have a special tax for those people who use those ports, and it's import duties. But also later on in the video, we talk about how the government needs to help make manufacturing, in South Africa locally more viable. Well, if you think about it, right, if the government makes it more expensive for you to bring goods in from out of the country, they are in effect incentivizing you to rather shop local, right? They're incentivizing you to shop local if it's available local, or to actually invest in the manufacturing capacity of the country so that you don't have to pay those duties, right? So remember, whenever we say we're complaining that there's 880,000 Rand in import duties, we don't have to pay that if we shop local. We don't have to pay that if we invest locally. Okay, so yeah, let's go on to the next one.
Sales, followed by 282,000 Rand in employee-related taxes. Think PAYE, UIF, SDL. Then the
Okay, so then we've got employee-related taxes. Now, I have to be honest and say that I don't think I've ever heard anyone actually complaining about employee-related taxes as if they are a business expense. And I think that we all know that PAYE is that tax. Whenever we get our payslip, it says gross salary 50,000, and then it says PAYE minus 5,000. That is a tax on the employee, right? What happens is that, or maybe where the confusion could come in, is that the business owner is charged by SARS, right, to, once again, like the VAT example, to be an agent. So they pay out 50,000, but they hold on to 5,000 in PAYE, and at the end of the month, or by the 7th of the next month, they pay that money to SARS, right? So what's happening is that SARS is saying, I don't want to have to deal with millions and millions of employees. I'd rather deal with a few thousand or 100,000 business owners that pay me. And it makes the collection effort of SARS a lot easier and a lot more consistent if you make the business who is paying the salary responsible for deducting that tax, that employee tax, and paying it over to SARS. Okay, so let's go on to the next point.
640,000 Rand in fuel levies and road accident fund contributions.
Okay, so then the next item is 640,000 Rand in fuel levies and road accident fund contributions. Now, I think let's jump into Excel and we'll be able to see this one a little bit easier. Okay, so I've got here the fuel levy, currently 4 Rand essentially. The RAF contributions, currently 2 Rand 18, comes to 6 Rand 17. And then I just wanted us to compare the current price of fuel is 21 Rand 47. And yes, we do pay 29% of our fuel per liter that goes directly to the government. Now, here's the thing. In this exercise, right, I understand that there's a general sense of 30% of what I pay for in a liter goes to the government. I understand that sentiment of being unhappy about that one, but we all pay it. I pay it whenever I get fuel. You pay it. The business owners pay it. So everyone who makes use of fuel in this country pays this contribution, right? And the reason is that when we buy fuel, we're buying fuel so that we can put it into our motor vehicles and then we can drive on the roads that have to be maintained somehow, right? So the people who don't have vehicles, who don't have cars, those people don't pay it because they're not on the road, causing wear and tear. And they're also not on the road, increasing the chances of a road accident happening, right? So it's fair that everybody who's buying fuel pay these fees. And I would say, you know, what reasoning is there to exclude the business owner from paying these contributions just like everyone else? And I would think that more so the business owners who have those large commercial vehicles that are causing us potholes on a lot of our roads, those people should definitely be paying these fees. And so if you're going to be in a business that makes heavy use of the roads, you are causing heavy damage to the roads and you should pay for that. I don't see why, because it's a small business or whatever it is, that person should be excluded from paying that. But also, I do want to mention that there are those people in certain industries, farming, forestry, fishing, and mining, who are users of fuel, right? Because if you have a tractor, that tractor's on your farm and it's doing a lot of work and you're using a lot of fuel there. They use fuel, but they don't necessarily use the large majority of their fuel on public roads, and so they're not damaging and they're not increasing the opportunities for a road accident. So for those people, the government does actually provide a measure of relief, right? So they implemented this diesel refund system in 2000 to provide full or partial relief for the general fuel levy and the RAF levy to primary sectors. It's in place for farming, forestry, fishing, and mining sectors. And that is there to recognize the fact that, okay, the point of these levies is that these are people who use the roads, we need to maintain them. These are people who are on the roads, increasing the chance of a road accident, and they need to pay into sort of an insurance fund. But there are people who do not use our public roads like that, and therefore those people shouldn't have to pay for that. And so the government does provide a carve out. So farmers especially use this a lot. So I think that it's clear that this fuel levy is not a levy that we need to include as part of our complaints about how much tax is levied on the small business, right? Because remember that the small business could choose to participate in a business that does not use fuel and therefore does not have to pay these levies. Okay, so let's move on to the next item.
Fund contributions and 875,000 Rand in operating expenses.
Okay, so then we have 875,000 Rand in operating expenses like government fees and levies. Now, I cannot guess at what these fees and levies are, and so I can't tell you whether they are a tax or not a tax, whether they're calculated correctly or not calculated correctly. And so for me, because I have no idea what these items are, I wouldn't include that in as part of, you know, here is the lump sum of taxes that small businesses are being overtaxed with. I think I would rather move on to the next one than to try and
that include various government fees and levies. Now, after all of these deductions, your business shows a net profit of 1 million Rand, but the government isn't finished yet. They take another 280,000 Rand in corporate tax, 28%. And if you
okay, so then we've got corporate income tax. So now, obviously, everyone pays, not everyone, every business will pay a corporate income tax of some amount. The first thing that I want to say, though, is that the 28% is incorrect, because if we look at the current tax rates on the SARS website, we can see here that the current rate is 27%, and it has been 27% since the 31st of March 2023, which is about 2.5 years now. And I would have expected that this video would have at least made sure that this is correct. So this video was released on the September 18th, 2025, right? So it should have had this correct. But also, more than just, you know, the 1% difference there, this business that was described, okay, would actually fall under small business corporations, right? Small business corporations, if you look at the SARS tax guide, are those corporations that make less than 20 million Rand a year, all right, in their gross income. There's a few other requirements here that I won't go into, but essentially, because we made less than 20 million Rand a year, because remember we made 11.5 million in collections, then we made less than 20 million, therefore we can fall under small business corporations, and those small business corporations actually do get a special rate of tax, and it's over here, right? So see here, the first 95,000 Rand is actually tax-free, okay? Because the government does want to encourage smaller businesses, okay? Then it graduates and it charges 7% on this next tranche here, 21, and then only once you've made more than 550,000 Rand do you actually get to pay the full 27%, okay? So let's jump into Excel and I'll show you the calculation. Alrighty, so I've got it here, right? So I've got our million Rand profit, okay? And then there is a fixed amount of 57,698. And then the amount that is above 550,000 Rand, as you can see, I took a million Rand minus 550,000 multiplied by this 27% over here. That gets taxed at 121,500 Rand, okay? And then in total, when you put it all together, you only pay 179,000 Rand of tax, okay? That means you get to keep 820,000 Rand in profit, as compared to the 270,000 Rand that a company that does not fall into the small business corporation definition would have to pay, okay? So that gives us like a difference. Like when you look at the difference, there's a pretty big difference, 90,802 Rand, okay? So let's go back to the video.
And if you decide to pay dividends from your remaining 720,000 Rand, they're going to grab another 144,000 Rand in dividend tax, which is about 20%. Now,
so then we have dividends tax. Now, the 20% is correct. That's the tax rate for dividends. But what isn't correct is including this as a tax on the business, because dividends tax is a tax on the individuals who receive dividends, not a tax on the business. What might be causing the confusion, similar to the employees tax, is the fact that the business is the one that makes the payment to SARS, okay? And that happens because SARS charges the business to work again as an agent for SARS by deducting the 20% from the dividend that it was going to pay to its shareholders, and then taking that 20% and giving it over to SARS. So it's not a tax on the business. It's a tax on the people receiving that dividend. All right, let's move on.
when you add up all of these government extractions, VAT at 1.5 million Rand, import duties 880,000 Rand, employee taxes 289,000 Rand, fuel levy 640,000 Rand, operating expenses 875,000 Rand, corporate tax 280,000 Rand, and dividend tax at 144,000 Rand. The total that government ends up taking from your small business is a staggering 4.6 million.
Okay, so let's jump into Excel for this one and see how we get to this total, right? So this total, remember, there was the 1.5 million Rand, 880, 289, etc., and that's how we get to the 4.6 million Rand. Now, when we look at our example, we said the VAT is incorrect because at no point will we pay this full output VAT amount. We forgot to include input VAT, and so that would reduce how much we send over to SARS, and we would only send 978,000 Rand, okay? Then the import duties, we said we have no idea what we're importing, etc., and we also don't know whether the VAT in the import duties was included in the cost of sales figure that we used for input tax, so we just kind of left it like that. The employees taxes, as we said, this is not a tax on the business, it's a tax on the employee, and the only thing that I've included here is a 1% that the employer is required to contribute for UIF. The fuel levies, as we discussed, these should just simply not be included in this tax discussion, this tax on small businesses discussion, because all users of the roads have to pay for maintenance. Otherwise, there's no roads for you to use and you have no business. So I would exclude that. The operating expense amount, again, because we have no idea what makes up this operating expenses, I've just left it out entirely. I can't reason or guess at what was there that is an actual tax, so I will assume that none of it is really a tax. Income tax, we adjusted that down and we used the special tax rates for small businesses and we put that there. And then dividends, we discussed that these are not a tax on the business, they are a tax on the receivers of the dividend. And so we get to an adjusted total tax of 2 million Rand, okay? And then I want to just further adjust this by removing this VAT, because VAT is not a tax on the business. VAT is a tax on the customer that's collected by the business. And so really, the taxes that might make some kind of sense are only 1 million Rand as compared to the 4.6 million Rand that was claimed in the video. Yeah, so it's been fun breaking down this video. It was the perfect vehicle. I've actually been meaning to make a video that was talking about some of these misconceptions that I hear sometimes, because when we deal with small business owners, they do have these questions, right? And even in this video, you can see in the comments that there's quite a bit of agreement. Here someone's saying, look, we're overtaxing small business. I regret registering a company. It's a problem for me. Tailored for poverty. So there's a lot of negativity around the tax regime in this country, but I believe that when business owners can understand what the tax is, or even in fact, where am I actually being taxed as a business owner, rather than taking on the weight of paying VAT yourself, you do the correct thing, which is to increase your pricing so that your customer is the one that pays your VAT. Rather than assuming the weight of responsibility of your employees' taxes, you understand that no, this is not a tax on me, this is a tax on my employees. The same thing with dividends, and the same thing with the fuel levies. When you can understand where that money is going, what it's for, or why it's there, then I think it reduces the anxiety that we can have as business owners, and it also helps us to be able to plan better, especially that VAT one. It helps us to be able to price better. And in fact, we do have a video called VAT is Unfair, where we go more into a better deep dive about how exactly VAT should work and how we should price when we are a VAT vendor, and I'll link that video below. All right, so I've had a lot of fun, and I hope you've also enjoyed this video, this breakdown. It's a bit of a different style than what we're used to. And hopefully we'll be able to do more in the future. Thank you for watching. I have been Mtambo, and I hope you have a blessed day.